Hi guys, how are you? Vladimir here. This is the live market review, daily live market review, 9 of August 2017. Yesterday was a pretty storming day, second part of the day, thanks to Mr. Trump and his, direct threat on North Korea. Fear and fury threat. The thing is here that no one really can know what to expect, not from North Korea leader Kim and not from US leader Trump. And while they're busy with treating each other and show off of the muscles, the world is scared of that and the markets are scared of that as well. And we saw the immediate impact we got yesterday that actually happens because of the fear. And well, this is not something most likely to be like an impact, but it does have its effect, and it's not something to impact immediately, I mean, but it definitely has its effect, and it shows that if anything goes a bit more serious, if anything goes and develops into a reality, the market would very likely react heavily. So how does it affect on the market? Let's go over our trades and let's see what are the opportunities we have. Start with the euro dollar. This pair has reached its final place we wanted, the 117 area, right? We got the bounce from 61.8 right here. We do have a bullish divergence here, which also shown well on the 1 hour chart. Now, for the long run, I don't see any changes. This current pullback is normal. We are right on the 20 MA of the daily chart. We did have two waves down on the 4 hour chart. We do have a bullish divergence on the 4 hour chart, but that's basically all. We don't have anything else. We don't have a bullish hidden divergence for on the daily chart yet, and we do have this top holding. So from my point of view, as long as this scenario continues, lower highs, lower lows, sell rallies is the right thing to do, or hold your sells is the right thing to do, because the next step should most likely be 116.50. Here there's a full duplication, and very likely all the way to 115, which should be right here. And this is the 4 hour chart expansion, but also, believe it or not, this double cycle here, 23.6, the first one, and then the final destination of that could be all the way here to 114. That would be the 38.2 retrace of this double cycle on a daily chart, and also the 261.8 expansion of the current correction wave. So for me, as long as the top holds, I would be looking for sells. Now the crystal ball suggests us basically the same. You remember the levels yesterday, right? And this is the range that we have right now. 4 hour chart range changed a bit. Now we have this one is higher. It's not relevant, but this one is relevant for us. That's the current range we have, and it's holding everywhere. So, oh, sorry, that's euro pound. Sorry. This is the range we have on the 4 hour chart. This level is a bit irrelevant currently, too far, but of course hold us the level, and this is what we have on the 1 hour chart, and it's holding, it's finding it as for now. If it was successfully will, great chance that we should be looking for the sells here. And if it rallies now, which could happen by the way, because we kind of have triple cycle here, right, or special weird cycle, right, but we have it right, one huge, two, and this, which is still acceptable because these two legs are equal. So one leg could be different than triple cycle, and a retrace forward, let's say towards 108, is also acceptable, of course, maybe even slightly higher. So that's for the euro dollar and the longer review we have. Pound dollar, same story. We got a triple cycle, 1, 2, 3. We want to get two waves up and we want to go for sell. Now that two waves up could be like this, or alternatively we could go and stick in the range now, which means this. That's also doable scenario, of course. It could do like 1, 2, 1, 2, 1, 2, and then we will be looking for the sell. So the range should become bigger than the previous trend, and then we can be looking for we could look for the sell. So in the short term, for those of you who look on the buys, that's the two ways to look for where to cash out: top of the range or two waves duplications. But basically it's simple. Once you have your divergence against you, get out. Why to fight? You are still against the current trend, and there is not bad chance we might get it even lower. Now on the daily chart, it's forming a bullish divergence here, bullish hidden, and on the 4-hour chart though, it's a continuing divergence, but with such divergences normally provide one or two more lows. So that's why I believe that's what should happen next, to 128 or 127, from there longs. So as for now, short term is acceptable for buys, but I do expect sell rallies here for further low. Dollar Canadian, so far no changes. I'm basically doing all the same as we expected. Now New Zealandian dollar is very interesting one. My view from yesterday did not change, so if you didn't have the chance to watch yesterday's video, we keep the same view. Please watch, or just remember this: there is a good chance this is a triple by itself or just extending to special. Now cross below the 0.72 of the daily would be amazing place to make us short-term buy, long-term sell. But as for now, as long as we don't have any false break followed by a convergence, the pressure remains bearish, and this is our current direction. Next one on the list, Aussie Franc, a pair that we have been shorting, and here we are making the move. No divergences developed yet, combined with 4-hour and daily. So basically pressure remains bearish, and I expect it to go further down. Now this 38.2 target is slightly lower of this double cycle, that's 0.7530. This one was reached, that's the 0.7590. This two double cycle still has a room. So technically this pair still can take us to here and here if we treat that as a triple, which could be of course also relevant. From here we will be looking again for buys. Let's continue then. Euro Franc, another monster that made a wonderful movement for us. Remember the levels we've been talking about, two false breaks convergence? We got it, and we got paid, and that was beautifully done yesterday. Breakout and continuation. Now targets, the first special cycle, this one has reached its 50%, that's why we got a bounce, and the final one is the biggest one, which still has the room for us a bit further, could take us to 112. Now we don't have divergence against on the daily, we do have only 4-hour chart hidden divergence with 1-hour chart continuing. So sell rallies from my point of view is the right thing to do here yet, as long as we respect this trend line. This is a special cycle by itself, so situations like that should be considered to sell towards 112, as long as the trend line actually holds. And pound yen is approaching to where it is. Pound yen, here we go, approaching to the bottom of this triangle range, call it whatever you would like, and is starting to form conditions for buys, which I love to say, of course. Here we are. By ideal, that would be the final spike for us, so we can grab it there, but we already can see bullish divergence. Who is missing me there by the phone? So this is what we have here. Now if this falls break completes and we go above this high, that's the place where we will need to get two waves corrections, and then with the breakout we should consider for possible buys. Why? Because that's the bottom of the triangle and it's about to rally. That will be the place where you will get the best of the risk reward. That's not a guarantee it's going to pay. It is a guarantee you are going to start from the best place. which is the most important thing for trader, because if you start from the best possible setup, the chances are increased to finish as profitable, and the risk reward you can gain here is much higher. So you can be wrong once, twice, thrice, 4 times, one time to be paid all that move, and you make much more than you actually risked before. And that's the art of real trading. It's all about the risk reward management. It's not about how many times you were right or wrong. It's about how much more you made when you were right than you lost when you were wrong. It's all about that. And for those of you who cannot deal psychologically as for now, as on growing process, there are 2 alternatives. One of them is invest principles, which means no leverages allowed at all, even negative leverage, which means trade with less than you actually have in your balance. And the second, fixed lots. If you cannot deal with percentages, deal with lots. Fixed lot for every trade. And then you are aiming to trade for pips, right? Not for the percentages, for pips. And the pips value is in your control. So if, for example, one lot is too big for you, that as each pip is $10 on average, then do it on 0.5 lot. If it's still too big, 0.2 lot, 0.1 lot, 0.03 lot, as long as you can sleep well. Which means you are risk-free. You don't care even if you lose. It doesn't hurt you. That's the comfort zone. And every trader has to find his own comfort zone. If, of course, he or she wants to make a successful performance. As long as you deal with the pressure that make you make the same mistakes, psychological mistakes, and close late, close early in profits, and so on, if you get affected by that, simply switch your management idea. There is nothing wrong with do investment. There is nothing wrong to do with fixed lot. And for some strategists, believe it or not, I love fixed lots. I even prefer that. It's much easier psychological. There is no competition what performs better and who does better. Trader's job is to make profits. Doesn't matter how. No. Well, as long as the risk controlled. And these little tricks help you to control the risk. So that's for the pound yen. Let's move on, guys. Gold and silver. Gold completed for us the double cycle movement we wanted. And boom, voila. We are most likely going to the top of the final range, which should be right here around 1300. And same with silver. Did a beautiful move down. Remember our previous week analysis? 2 waves down, bullish divergence, bullish hidden divergence. And voila, continuing further on. So our view did not change, just got stronger. S&P, 2 false breaks in a row completed. 1, 2. We need this low to be broken. And if it does, we would be looking for sell. If it doesn't, we would be looking for patience, waiting for the setup. Because if you don't wait for a setup, you would get stuck in this. Do you want to get stuck in this? Can you make money here? Well, I can't. If you can, hats off. Teach me how. But that's from my point of view, not tradable situations. And I always say it's best to avoid these things that could lead you for wrong decisions. Such conditions. Do you really want to deal with them? It's like pressing the gas button in your car while you are in traffic. It will lead you to where? Nowhere. So that's basically what we have here. And that's all, believe it or not. Now there are a few more things developing, like the cat franc pair we have been following from also previous week. Now making a pretty nice move down. We will be waiting for a bullish hidden divergence to form, followed by a 4-hour chart divergence. It's not there yet, so there is no need to put it on the line. So we are waiting a bit. Okay, guys. So that's all. Now one more, actually two more, we can see now. That's how it's calling it. This is the Aussie dollar, which now have this possible range. It's trying to break it, right? But it was false break here and one. Just a second, guys. Someone call me. Yeah, sorry for that. Someone is missing me. Okay, so we got a false break right here. We got a false break right here forming. Now, if it's a false break to complete, what could happen here is 1 hour chart. Here, that would be our latest relevant false break. So if it does that and scroll above the trend line, creating higher highs for us, then we switch to buy retraces. As long as it didn't happen, we are good for sell rallies, and we are aiming, remember that, for combo of a daily bullish hidden with 4-hour chart divergence. And this is why most likely this pair is coming to the end of the movement. We are still good with the sell rallies, but take a look where the level brings us to. Take a look, guys. We are now at 161.8, very close to it, right? So we might get this one more false break, and then higher highs of this by retraces. But as I said, as long as it didn't happen, the bearish pressure remains on, and we might go all the way to 261 expansion, which is right here. Okay, and also right here, also this daily supportive zone. See that? Around the 077 area. So bearish as long as the false break and the convergence did not complete. If it does, stop. Very simple. That's all. Yep, that's all we covered here, and yep, that's the list. So thank you for watching. As always, if you enjoyed the video and you find it helpful and you like it, please leave your comment below. Click the like button. Your comments and your feedbacks are very valuable, and I really appreciate that. And that's what motivates me to continue and creating these things for you guys. So I hope you enjoyed it, and I hope you find it useful and you benefit from it. Thanks for watching. I'll see you tomorrow.